If you invested $10,000 into Meta Platforms stock in 2013, you would have $66,800 today. That's an incredible return for investing in just one stock. So in this video, I'm going to go through how and why Meta Platforms stock has grown as much as it has, and if investors of today can expect something similar over the next decade. So let's get right into it. Now, looking at Meta Platforms' total return over the last decade, you could see very nice growth. And in fact, the stock was up over 1,000% at one point before being cut nearly in half. And it still returned investors so much money over the last decade, even though the stock price has been cut in half since the middle or later parts of 2021. That's really incredible. So Meta Platforms, one of the reasons why the stock price has increased so much is because of the phenomenal revenue growth. The company went from around 8 billion in revenue in 2013 all the way up to $116 billion in revenue over the trailing 12 months. Now this has come down slightly from the highs of nearly 120 billion, and that little bit of a decline is why Meta Platforms stock price got cut almost in half. Right? Investors really panicked when they noticed Meta Platforms growth in revenue slowed down. And it was partly due to the reason why it slowed down. If you're not aware, Apple implemented changes to its privacy policy that makes it harder for Meta Platforms to collect data on its users and then sell targeted advertising. That caused its revenue growth to slow down because marketers are willing to pay more if they can buy targeted ads, right? They're more efficient, they're more effective, so marketers are willing to pay more. And because of those headwinds, Meta Platform stock has the growth rate has slowed and the stock price just got cut in half. Now, I would argue that was an overreaction, but that's what happened, right? The next reason why Meta Platforms stock, and in fact the more important reason why Meta Platforms stock price exploded the way it has in the last decade, is because of the phenomenal earnings growth. It went from a roughly break-even company in 2013 all the way up to delivering earnings per share over $12. Phenomenal earnings per share and profit growth, and that's what had investors really excited. And the drop in earnings is also why the stock price came down, right? Even though revenue only fell slightly, earnings per share have come down dramatically because at the same time revenue growth has slowed. Meta Platforms has invested tens of billions of dollars in becoming a metaverse company. And those rising costs and slowing revenue have really hurt Meta Platforms' earnings per share. And so the stock price got cut in half. Still, though, if you look back longer term, you see excellent growth in the earnings per share and excellent growth in the stock price. This is where it pays to be a long-term investor and really focus on the long term and not short-term fluctuations. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So right now, Meta Platforms stock is trading at a forward price to earnings ratio of 16.84. This is really cheap for a company like Meta Platforms. In fact, this is roughly the cheapest you've been able to buy Meta Platforms stock if we ignore the time from 2022 and on. If we ignored this last year and a half, over the last decade, you haven't been able to buy this stock at this kind of valuation. It's really the worry around these privacy policy changes, and of course rising competition from TikTok is playing a role, but it's these headwinds that have caused Meta Platforms stock to trade so inexpensively. So if you're thinking to yourself, I'm too late on Meta Platforms stock, it's already a mature company, I should look elsewhere if I want to find a company that can grow the stock price, that can grow the earnings per share, I think you would be selling yourself short there. I think Meta Platforms does have excellent potential over the next decade. I don't think it's too late to invest in Meta Platforms stock. In fact, Meta Platforms is one of my top 20 stocks to buy for 2023. Now, if you want that full list, I'll link the video at the end of this one. But to start the year, I said, hey, Meta Platforms is a great value. You should go ahead and buy the stock for 2023. The stock is already up nicely so far to start the year, but it's got room to go higher. And in fact, it's got room over the next decade to go higher. I think right now investors overreacted to the bad news, and you can use that as your advantage and buy the stock for the next decade. So no, to answer that question, it's not too late to buy Meta Platform stock. All right, so that's all I've got for this video. Thank you so much for watching. I'll add the videos at the end that I think you'll enjoy, so please click on one of those. I'll see you over there.